Hey traders, this is Travis from Master the Market, and in this video we're going to be talking about whether or not you can really trade with 90% or higher accuracy in the stock market, and if so, what exactly does it take in order for a trader to achieve those types of results. So in order to get into this, it's really important that you understand a little bit about risk and reward in the stock market. Every trade that you get into, you should have some kind of trade plan, and we're going to break down exactly what that trade plan should include. So if we take a look here at this chart for GTII, this was a big breakout that we caught actually today in chat. It hit the breakout scanner in the 270 area, and it started to break out, held VWAP, and actually ended up having a pretty big run throughout the rest of the day. But I bring this up because this is one of the stocks that I actually traded today. I made a nice profit on it, and I wanted to break down kind of my thought process going into this trade, so that way you can understand it and apply it to your own trading. Now with GTII, what we're looking at here is the 5-minute chart. So if we zoom all the way into this morning session here, this first candle here is where the stock market actually opens for the day. This is at 9:30 a.m. Eastern Standard Time. And what we see right out of the gates here is that this has a big spike up. Typically, these are going to be stocks that I like to look for an opening range breakout for. To give you a very quick summary on the opening range breakout strategy, what you do is you let the first 5 minutes form. You would draw yourself a high and you would draw yourself a low for that first candle. And then you're simply going to wait for a confirmed breakout above or below that range in order for you to take either a long or a short position. So in this case, obviously we get a breakout to the upside. The stock is looking very bullish. It's also short sale restricted from the previous day because it had a big sell-off to the downside. All of those things are going to affect this stock and make it a potential runner. So I was looking at this for a breakout trade and I actually got into some in the 270s very quickly as soon as I saw it hitting the breakout scanner and as soon as I saw that opening range breakout. Now with all of that being said, a trade plan is going to really include a few main things. With the trade plan, you want to have first and foremost a risk level. That risk level is going to tell you where you should cut losses on the trade if the trade happens to move against you. So in this case, because we do get an opening range breakout, this strategy gives us a very clear level of risk because now we know if the stock pulls back into this opening range and actually starts to break down below that opening range, that's going to be a very bearish signal for the stock. So I would want to cut losses on the trade down here in the 220 area. Once you have that risk level in mind, that's actually going to affect the amount of shares that you buy in the stock. Because if your maximum risk, for example, is $100, but based on your entry and based on your risk level, you have to risk 50 cents per share, then it would not make much sense for you to buy 500 shares of that stock because if you hit your maximum risk of 50 cents per share, that's going to be a $250 loss, even though the most that you really wanted to lose on the trade was just $100. Okay, now the other thing that we want to keep in mind when we're creating this trade plan is going to be some kind of profit target area. And that's just going to be an area where we lock in some of our profits. This does not mean that this is where you sell out of your entire position usually. This is just kind of going to give you a gauge of your potential risk and reward on the trade. And it's going to be a good spot for you to lock in some profits. And then hopefully you can hold on to some other shares and let them continue to run to make even bigger profits. But the way that we get these target prices is going to usually depend on some kind of technical analysis. If we look down here at the longer term charts, let's take a look at the 4-hour chart. We could see that this is where the price was at this morning. And really there's not a ton of resistance in that area in the $2 to $3 range that's going to be used as a target price. If we draw a line here from this peak on this day, that could be a potential target price area. Oops, let's go ahead and draw a flat horizontal line here. So that's going to give us a potential target price there just at $3 per share about. From there we have some maybe at this past support area here, which is just under 4. But as you can see with this example, there's not a ton of major resistance in the area. And that's another thing that's going to make this a potential long because obviously it's never a bearish thing for a stock to lack clear levels of resistance. But those couple of things, the risk level, your target price, and the number of shares that you're trading are really the key components of forming a trade plan. In my opinion, you should have a trade plan for every single trade that you get into. It's going to really help you trade based on your strategy, and it's going to help you put some of your emotions like greed and fear to the side. Now, with that being said, let's get back to the question of whether or not you can actually trade with 90% accuracy in the stock market. Simply put, to give you the straight, quick answer, the answer really is yes. It is possible to trade with pretty much any number of accuracy that you can imagine. However, that doesn't necessarily mean it's going to be a good idea, and it doesn't necessarily mean that it's going to be the best for you. So if we take a look here, I just want to give you a quick example of what I mean by this. If we take a look at this example here, this column here, the P&L, is going to be the profit and loss of each of these 10 trades. This win or loss column here is going to give us a 1 for a win and a 0 for a loss. As you can see, we have 9 winners here out of 10. That's going to be 90% accuracy. But obviously our total here is still in the negative because we have one big loss that wipes out all of these other smaller gains that happened within these 10 trades. And that is very commonly what happens when traders are trading with very high percent accuracy. You may see somebody talking about how accurate they are. Maybe they trade with 85 to 95% accuracy, or maybe they're talking about a strategy that they use that can give you 90% accuracy. And they may actually be telling you the truth about how accurate the strategy is, but the thing that's really going to be important is how much they're losing when they lose a trade and how much they're winning on any average winning trade. Because in order for you to achieve a high percent accuracy like 90%, the simple fact of the matter is that you have to be risking a much larger amount than you're making on any given trade. Now, if we take the other side of the spectrum here, we can see that in this case we have 30% accuracy, we have 3 winning trades and 7 losing trades. However, we're still profitable with $180 in profit over these 10 trades with just 30% accuracy. And the reason for that is simply because our winners in this case happen to be significantly larger than our average loss. So again, the number in terms of accuracy doesn't really represent profitability in the stock market because you can have a very high accuracy and still be a losing trader because of how much you're risking on any given trade. And on the other side of the spectrum, you can still be a profitable trader with a very low accuracy if you're forming trade plans and if you're managing your risk. At the end of the day, what it boils down to is kind of your preference. A lot of traders prefer to have higher accuracy and they can deal with taking larger losses when they happen to be wrong about a trade. And then there's other traders that can't stand to lose a large amount on any single trade, and they would rather have a lower accuracy and take more consistent, smaller losses. Either one of them has the potential to be a profitable trader. It's just going to come down to the strategy and the way that they manage their risk. So hopefully this video gave you some insight into accuracy when it comes to day trading. I'm actually just starting to put together a video where I test out popular day trading strategies. So that way, hopefully you don't have to test out the ones that don't work. And in doing so, I've been searching on YouTube for these popular day trading strategies. And I came across some pretty crazy claims. Some of them talking about 98% accuracy, some of them talking about never losing a trade again. And that's what kind of led me to create this video to explain a little bit about how accuracy plays into day trading and how, yes, you can be accurate 90% of the time, but you can still be a losing trader overall if you're not properly managing risk and cutting losses when it's time to do so. So anyway, hopefully you enjoyed this video and found some value in it. If you did, please make sure to give the video a like and subscribe to the channel. And if you want to learn more about day trading, swing trading, and long-term investing, as well as the step-by-step strategies that I actually use to trade full-time, or if you want to come join us in our trading group, you can find more information on those down below in the description. Thanks again for watching. I hope you enjoyed, and good luck with your trading.